So is there any correlation with stock market returns and outcome of elections? So the first thing you need to realize, basically markets do not like uncertainty. So what combinations of parties have the highest returns in terms of the president versus the Congress? Well, if you want to go through and look at just the presidents, the Great Depression happened under Hoover, the oil crisis was under Nixon, and Bush was the dot-com and the Great Recession. So those were the three worst periods where we actually had negative returns. They were all Republican. Why did that happen, at least for the Great Depression and the Great Recession? So basically you could say there's easy money and speculation. Well, in the 1920s, the Roaring Twenties, basically you could just borrow as much money as you wanted from the bank, invested it in the stock market, and basically when the stocks went down, there was no money to repay the banks. And that was before FDIC, so if the bank went under, you lost all your savings. And in the 2000s, it was kind of the same thing. Basically, you had ninja loans, no income, no job. You can still borrow whatever, buy a house, buy multiple homes. You didn't have to prove your income. You can get adjustable rate mortgages that then went up as soon as the interest rate went up. And then when lending tightened, and you actually had to prove you had an income and could pay the bills, that's when that all came crashing down. So that's for the president, but what about the combination of the president with Congress? Well, we have a president, Democrat, Republican, and Congress either both held the House and the Senate by Democrats, a split Congress, so half is Republican, half is Democrat, or both are Republican. So regardless of the president, whether they're Democrat or Republican, the best years tend to be when you had either a split Congress or a fully controlled Congress by Republicans. And the worst years seem to be when both the House and the Senate are controlled by Democrats. And on average, the worst combination is basically Congress completely controlled by Democrats, where the White House is controlled by the Republicans. If you look at inflation-adjusted data, it comes out very similar to this. The returns are basically just reduced. The data shown here is excluding 2001 and 2002. That's primarily because one of the senators changed party, which had an effect on that. So I'm trying to think through this, and one of the thoughts I had was, why is it when Congress is partially controlled by Republicans, whether it's one or both, we tended to have higher returns? Congress is making tax law. One of the things they like to do is reduce taxes if they're a Republican party, and if it's divided, it's effectively you have less chances for change, which means more certainty. And going back, markets like certainty, they do not like uncertainty. So that's why I think it performs well. The other thing to note here is that higher returns leading up to an election tend to result in the current party winning more often. Which party do you think will be the best, and why? Leave it in the comments below. I'd like to see your answers. I cover financial topics on this channel, such as how to make more money, how to save, and how to invest. If any of those interest you, please subscribe and have a great day. By the way, I don't like to go into politics. This is just loosely associated. All right, well, thank you for watching and have a great day.